What's up, everyone? It's Caddy with Money Investing. So in this video, I wanted to talk a little bit about the markets, right? Is this a bull trap? Am I being a little too bearish? Because I did get a few harsh comments down in the comment section below on YouTube. A few people talking about, Caddy, you're just being way too bearish right now. Because of that, we're missing out on opportunities. You're just talking about, markets coming down, pulling back, crashing, whatever. And the housing market prices are coming down. Like, all you talk about is being bearish, right? So I wanted to address that. And hopefully by the end of this video, you'll have a better sense of what this channel is really about, as opposed to kind of, me being completely bullish. Like, if you're watching this channel, if you're coming here to kind of listen to me, and if you're expecting some good news, Caddy's going to tell me, what I want to hear. Well, unfortunately, this is not the channel for you, right? Because I'm not going to always come across as somebody who's always bearish or bullish. I'm going to give you a balanced approach. I'm going to give you a very realistic picture of what's going on in the markets and the economy. So if that's what you're here for, great. We'll love to have you on board. Stick around, because you're going to get a lot of detailed analysis and insightful data and facts and based on numbers. But if you are looking for just simply bullish or bearish analysis, and it's going to be the same way across every single day, then unfortunately this is not for you, right? Because my goal since the beginning was to be very, very completely honest and transparent with my audience, which is one of the reasons I never take any sponsorships either, because I don't want to promote anything, any product or service, which I don't personally believe in, right? So that's the same thing with my market analysis as well, right? I'm not going to be pushing out a narrative which I don't believe in, right? I'm only going to be telling you which I honestly believe about the markets, about the economy. Now, whether that's bullish or bearish, it's up to you to decide, right? And yes, it may come across as being a little bearish or bullish, but that's regardless the point. What I'm trying to do is give you my objective, unbiased, transparent, honest analysis, and you can make the decision for yourself whether you like it or you don't. Unfortunately, that's how it is, because that's the promise that I've made to all my viewers. That's the thing that I'm not willing to compromise on, for the longevity of this channel. And this idea that we're missing out on opportunities because the analysis is a little bit bearish, or leaning a little bit more towards bearish over the intermediate term, I don't think that's completely true. Because look, I'm personally invested long term, right? Just because my personal thesis might believe, or might lean me to believe, that the markets are still a little bit frothy, fundamentals don't line up with this rally, the sentiment, the euphoria is driving this markets to new heights. And what's going on, considering inflation's too high, interest rates are going higher, does that mean that I'm actually going to be selling out of my entire long-term portfolio and then going short? The answer is no. I would not be doing that, because I understand that yes, there can be volatility, there can be a lot of back and forth between the markets in the short term, but long term, I'm very confident. Like, long term, I'm still very confident that markets are going to do well. The stocks that I own, the quality companies that I own, Tesla, Google, Microsoft, Apple, AMD, Nvidia, Meta, like, all these companies are going to do well over the long term. I think they are, they've got huge potential. And because of that, since the markets were higher, up 2% today, my portfolio did well, right? Most of your guys' portfolios did well. If you're watching this video, you had a great day today. And so did I. Like, I was up almost $10,000, and it's a good feeling, right? But at the same time, I cannot ignore the reality of the situation. And just because the markets are pushing higher, I'm not the type of guy who's going to tell you, oh, it's time to buy because the markets are pushing higher. We need to be dollar cost averaging because of where I believe the valuations are versus what my perspective is on the economy. So, this is another chart that I wanted to share, which I think is very, very interesting. And it kind of sparks, because of that momentum, because that sentiment, psychology plays very, very interesting mind games with us, because as the markets are going higher, the greed and that buying sort of, euphoria starts to come back into the market, right? It floods into the market. But when the markets are selling off and we're pretty much coming down, a lot of the fear and a lot of the selling sentiment comes back flooding in the market, right? So I can actually switch these things up to something right? So when the markets are pushing higher, I see it every time. Like, I see it in the sentiment, I see it in the comments, I see it on Reddit, I see it a lot of places. When markets are pushing higher, the sentiment quickly turns to, oh, the markets is heading back to all-time highs, right? The markets are, pushing higher, we're going back to all-time highs. And when the markets are selling off, you get a lot of sentiment, right? That it's the end of the world, stock market's going to crash even further, it's going to come down even further. What we need to do is kind of flip these two things, right? This needs to be over here and this over here needs to be down below. That's kind of flipping that psychology of your mind with respect to the markets, right? When we're pushing higher, when there's extreme greed, when there's a lot of euphoria, when there's sentiments way too high, what do you want to be doing? Do you want to be buying or do you want to be selling? Right? And it doesn't have to be so black and white. It doesn't have to be so cut and dry that you have to be doing one of those things. Obviously, you can still keep holding on. That's what I'm really doing. Like, I'm not actually actively selling any stocks just because the markets are pushing higher and I think the markets are frothy. It doesn't mean that I'm actually selling. I'm just holding. I'm just holding. I'm hedging, right? I'm hedging on the downside because I believe that, okay, if the markets do come down and pull back considering the valuation is a little too high, I want to be hedged. I want to be protected, right? I want to have that insurance policy that if the markets do drop, which I am anticipating that, okay, they will, then I'm hedged the right way. So that I think is really, really important. And when the markets are obviously coming down, then obviously you want to flip that psychology of, the markets are coming down. It's, it's the end of the world. Stock market's going to crash to something like, okay, it is actually time to be dollar cost averaging. Stocks are coming down to some extremely low levels. We are getting undervalued. We are coming down to some really cheap levels in terms of, the technicals might be oversold, whatever the thesis is, but we have to really flip that psychology. And I've seen it all the time. And right now it's like markets are pushing higher. And if I'm calling for more caution and I'm calling for more hedging, that's not that's not being received very well, because it's like, okay, Caddy, all you're doing is talking about a market pullback potentially, and you're telling us to be cautious, and here we see the markets keep pushing higher. Well, you can still hold on, right? I'm not telling you to sell anything, right? I'm not telling anybody to do anything, right? I'm holding on and I'm hedging. That's all I'm doing, right? I'm not buying stocks at these prices because valuations have moved up so much. And that's one of the reasons, we talk about valuation so much, is because take Meta, for example, right? Meta Platforms, few months ago, it was trading at a 10 times earnings multiple. At that point, it was severely undervalued. I did several videos on it, and we talked about, how FANG stocks and a lot of stocks collectively were trading at really cheap valuations. Fast forward 6 months, now Meta is trading at a 20 times earnings. Do I consider Meta now as an undervalued stock? No, I don't, right? So I'm not going to be interested in buying Meta at these prices. And we've also talked about how, recently when I did a Meta analysis, we talked about how now it can be considered as a stock that's either fairly valued or definitely a little bit overvalued to the upside. So we have to really kind of come to that, come to the same page here, understanding that valuations do matter. And that's my only goal here, is to kind of teach you, okay, when is an appropriate time to be dollar cost averaging with respect to the stocks that you want to own individually. Because if they've moved up and you're simply buying based on the markets pushing higher, and you're simply buying based because on the prices you see on your stock screens pushing higher, and that's your signal to buy, unfortunately, you're going to be in this cycle where every time the prices go up, you're going to be a buyer, and every time prices come down, you're going to be a seller. Instead, we need to flip that psychology and be more cognizant of how valuations work with respect to how the macros work. And again, I'm not, this is something that I think is a really, really telling chart, that over the long term, I still do believe that this is going to be the trajectory for the market, right? 5 years from now, we're still going to be looking back at these times and thinking, hey, the markets were great deals back then, right? We should have just held on instead of just selling at these potential drops and these pullbacks and these crashes. We could have just held on to the market and we would have done really well. And that is going to be true, in my opinion. Markets are going to do really well. And again, if you take a look at the S&P 500's long-term chart, right, very, very solid appreciation, capital appreciation with dividends. The earnings have grown. Everything's worked out over several decades, right, even centuries. And that's exactly one of the reasons why, I have done videos in the past, back in October, November, December, talking about those window of opportunities. And again, I want to point to that, right? Having that realistic approach gives me the flexibility to talk about times when it's really good to buy versus talk about times when it's not so great to be buying and dollar cost averaging, right? So back in October, November, December, by the way, I need to come back to this, but we were talking about how valuations were absolutely comical, right? I actually did a video back in October. I remember I was traveling back then, and I talked about how the valuation for Tesla, for Google, for a lot of these companies, for Meta, like they were coming down to even lower levels than that of staples and defenses and utilities. So those were times to be actually dollar cost averaging, right? We talked about it's just laughable how low the valuations are. So, we've already talked about it back in October, November. We talked about how going all in at this level for individual stocks, right? We talked about, is it finally time to buy stocks? Again, back in October, November, December, you go back, check out these videos. And again, talked about it 9 months ago. Like, this is rare. And for the S&P 500 to be down over 20% only happens very few percentage of times, right? 17% of times that happens. So it is rare. So don't miss out on the opportunities to dollar cost average and buy. So it's not like I'm always bullish or always bearish, or like, but I'm realistic, in my opinion, at least. You guys can do a better assessment. But what I want to do is I want to focus on valuations. I want to focus on where the market returns are, where the macros are, where we are in this economic and market cycle, and present you the opportunities where I believe is the appropriate timing to be dollar cost averaging versus when it's not. And if right now it's not, then I'm going to say it, right? I'm not going to tell you that, okay, now is the time to actually be buying when I don't believe it is. So hopefully you guys can appreciate that. And again, I want to go back and some of these Warren Buffett quotes, which I think are very, very interesting. Price is what you pay, value is what you get. Always remember that, because price and value are two completely different things. Just because the price is moving higher doesn't mean the value is increasing, right? And we talked about it, right? Just because Nvidia is trading up to $230, and lots of people have been telling me that Nvidia, you're missing out on lots of opportunity here because Nvidia is pushing higher. Well, I don't see the value at $230, right? I personally don't. Like, if I did, I would say it, right? If I don't see the value in Nvidia at $232, just because the price is trading at that level, doesn't mean the value is there. So there can be a big discrepancy, and we always have to understand that, right? If you overpay for any stock, well, sooner or later, it's not going to work out. Another really interesting comment from Warren Buffett is the stock market is a device from transferring money from the impatient to the patient, right? So again, the patient investors wait for the prices to come down. They wait for their values to get hit, and they are super patient with the way they approach the markets instead of like looking for that instant gratification. And when the markets are moving higher, time to buy. When the markets are coming down, time to sell. That's more sentimental, momentum-based investing and trading, as opposed to being patient, having your fair values. And look, I'm not perfect. I'm not saying that every time my fair values get hit, I'm a buyer. No, sometimes I'm short on cash. Sometimes I've got other, focuses. Sometimes I miss out on opportunities. So I'm not saying I'm perfect, but having that framework can really help you long term and keep you more patient, of course, and also more vigilant about the markets in terms of overall valuations and fundamentals. And then last but not least, only buy something that you'd be perfectly happy to hold it if the market shut down for 10 years. Another really great quote from Warren Buffett. So, only buy something at a certain price where you are comfortable, especially if you're investing long term, that you're comfortable holding on to that stock at that price for the long term, for the next 10 years out if the markets were to shut down. This is for long-term investors only. Of course, if you're not trading, that's different. So I hope you guys enjoyed this video and found it helpful. Again, I do apologize if I do come across as a little bit more bearish or bullish, but I'm trying to be very realistic and give you guys an honest opinion on the markets and be very objective and unbiased and kind of share data, right? If you can refute the data, then I have no problems with you. But the data and the facts about the earnings and the economic environment and inflation and interest rates is there. It's for everyone to look at. So that's all I'm sharing and kind of analyzing, what my expectations are from the markets, and then also sharing what I'm doing. So I'm not selling in any way. So just because I expect the markets to come down and, I'm a little bit more bearish, leaned more towards bearish, I'm not selling. I'm simply holding and then hedging on the downside. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. I'm excited to kind of read the comments of this video. But as always, happy investing. I'll see you all in the next video. Take care.